St. Mary's College, BizAd 136, investments, product presentation, team 1, and action.
I'm Mike. I'm Jerry. I'm Austin. And we recommend DTC launch a retail, institutional, large cap, diversified portfolio product. We target moderate risk and high returns of 13 to 14% over the total holding period. And our targeted investor segments are institutional, estimated about 1.25 billion, and retail clients also 1.25 billion, totaling in a $2.5 billion AUM portfolio within the next 7 years. With our fee structure, we will generate total annual gross fee revenue of 50 million. So here's our presentation outline. We're going to go over the sector allocation and major holdings, then the target market, then the portfolio performance, technical analysis, and the recommendation at the end. So here's our market sector allocation in our target portfolio. In total, wholesale trades came up with about 11%, information totaling about 29%, finance and insurance about 23%, transportation and warehousing about 6%, manufacturing 12%, retail trade and services 19%. And then here's our market sector allocation again for each of the portfolios. So for our passive on the left and active in the middle, and then target on the right. Here are our largest holdings for our passive portfolio: Google and Berkshire at 9%, and Amazon as well at 9%, and then JP Morgan and Visa at 8 and 7%. Our active portfolio, we have Starbucks at 27%, which is a really high holding, and Berkshire at 19%, Alphabet 15%, AMD 13%, Cisco 10%, and then for our final target portfolio, Alphabet was at 11%, AMD at 8%, Berkshire at 8%, and Netflix and Salesforce at 6%. So here's our target market. We're aiming for a 50-50 split of retail and institutional investors. The desired holding period of 5+ years for retail and 10+ for institutional. We're targeting investors desiring stable long-term returns. For example, company retirement accounts, 401ks, IRAs, or ETFs. We're also targeting large, high net worth individuals, estimated around 10 to 50 million, to be accredited or qualified investors, and we're targeting AUM of $2.5 billion per portfolio within 7 years.
So our passive portfolio performance, we had an expected return of 8.5% to 12% over the holding period. We can see that our beta is 1.18, which is slightly above the S&P, but our returns are much higher, approximately 500 basis points in alpha over a 10-year period.
So our active also is very similar. It's expected return of 9% to 12% over the entire holding period. Our basis points are about 500 basis points, and our beta is 1.2, which is a little bit high, but it is still strong alpha. And our target is actually a little bit better. We're expecting a return of 13% to 14% over the holding period. Our alpha is about 600, and our beta is 1.818, which is a lower beta than we have for our active.
Our fee structure, so our passive is at 1%, active slightly more at 1.5, our target at 2%. Our fee revenue in total will be $112.5 million with $7.5 billion of assets under management every year. Our fundamental analysis valuation, so we use the earnings per share predictor model to find the intrinsic value, which consisted of the perpetuity, Gordon growth, multiple, and discounted cash flow. From that, we could take the percent change from the current price and find a positive premium or negative discount. In total, we had 11 buy recommendations and 14 sell recommendations, with an average premium of 13.6%. And here are our key ratios. We got this data from Morningstar, finding the PE ratios, return on equity, return on assets, dividend yield, debt to equity, and the beta of all 25 of our stocks.
example of our technical analysis. This is for MasterCard. As you can see on the bottom left, we have the alert and then the buy signal, and then we sold a little bit higher, and then if you can see in August of 2016, we got another buy alert at $84.51. Then we had a holding period. Sometimes the 10-day moving average crossed over, but it did, and then it would cross back up. And so we got a few alerts but no signals up until the end of 2018 when we sold at $203.80, which obviously is huge gains. And here's just an example, or here's our total for our entire portfolio on technical trading, on technical analysis. We started with $100 million. Over the course of 3 years, we profited $59 million and averaging about $19 million each year. Pretty good, in my opinion. So our recommendation, we recommend DTC launch a retail institutional large cap portfolio product. We target moderate risk and high returns of 13 to 14% over the total holding period. Targeted investor segments are institutional 1.25 billion and retail clients 1.25 billion as well, totaling a 2.5 billion AUM portfolio within the next 7 years. With our fee structure, we will generate total annual gross fee revenue of $50 million. We also recommend that DTC launch a series of retail institutional large cap portfolio products. We target moderate low risk and moderate high returns of 12 to 14% over the total holding period. The targeted investor segments are institutional at 3.75 billion and retail clients at 3.75 billion total, for a total of 7.5 billion AUM portfolios across all three in the next 7 years. And with our fee structure, we'll generate $112.5 million a year. But on top of that, if we add in, after the technical and fundamental analysis, we could also add the long-short strategy with moving average crossover and premium discounts. We can buy on margin, we can buy and rank calls and puts, and yield enhance based on the fundamental and technical analysis. So that would add about 1,000 basis points on returns at least. And then with our dynamic active leveraging returns and derivative trades, we would have about 2,000 BPS for our alpha, and we could charge about 400 BPS in fees, if not more.
I'm Mike, portfolio manager.
I'm Austin, the senior fundamental analysis.
I'm Jared, the senior associate technical equity analyst.
Thank you for listening.